万科企业情况综述：业绩暴跌，债务高企，资产问题。事件背景：万科企业 China Vanke 作为中国最大的房地产开发商之一，近年来一直是市场的焦点。近年来，万科经历了一系列的挑战，包括销售疲软、债务负担沉重以及整体房地产市场的低迷。然而，2025年1月的最新消息显示，该公司面临的危机已经达到新的高度，引发了市场的广泛关注。近期事件时间线：2025年1月17日，万科的股价在香港市场下跌 3.1%， 收于 4.71 港元；深圳市场的股价也下跌 3.6%， 达到 6.63 元。这一波跌势源于有关万科主席兼首席执行官朱九生 Zhu Jiusheng 可能被警方拘留的报道，市场恐慌情绪加剧。同日，朱九生通过社交媒体平台微信发布消息，宣传万科的租赁业务，并提到将在假期后重新工作。但此时，关于他被拘留的报道在网络上迅速删除，进一步加深了公众的疑虑。1月16日，有媒体报道称，深圳地方政府可能会接管万科。这一消息引发了市场对政府可能采取救助措施的讨论。分析师认为，政府接管可能会被视为正面消息，帮助解决短期债务问题。业绩下滑与债务问题。根据最新的报道，万科的业绩在2025年暴跌 70%。这一下滑与公司面临的高达 1.1 万亿元的债务密切相关。尽管公司曾向部分债权人表示已准备好偿还到期的本息，但市场对其流动性和销售疲软的担忧仍然存在。此外，万科的长期信用评级被穆迪降级，从 B1 降至 B3， 进一步加深了投资者的信心危机。在即将到来的债务到期中，万科需偿还超过300亿元的债务，这使得公司的财务状况更加紧张。市场反应与投资者信心。万科的股价和债券价格的持续下跌，反映出市场对其流动性和销售疲软的担忧。分析师指出，万科的未来仍充满变数。部分分析师认为，政府接管可能有助于稳定市场，而另一些分析师则认为，这种措施的具体执行尚不明确。在债务危机的背景下，市场对万科的看法出现了分歧。一些投资者对政府可能的干预持乐观态度，认为这可能是解决万科困境的一种方式。另一方面，朱九生的去向成了市场关注的焦点，关于他被拘留和地方政府接管的传言，使得投资者情绪更加不安。未来展望。万科作为中国房地产行业的佼佼者，现在正面临着前所未有的挑战。尽管市场对政府救助的可能性有所期待，但具体的实施细节仍然模糊。此外，随着房地产市场的持续低迷，万科的未来仍充满不确定性。分析师们普遍认为，万科需要采取切实有效的措施来改善其财务状况，包括可能的债务重组和现金流管理。同时，市场对房地产行业的整体信心恢复也将对万科的复苏起到关键作用。结论：万科当前的危机不仅是其自身的问题，也是中国房地产市场整体低迷的缩影。随着市场对万科未来的猜测和不确定性加剧，投资者需密切关注有关政府干预的进一步消息，以及公司内部管理层的动态。面对重重挑战，万科能否迎来转机，仍需时间来验证。万科企业 China Vanke 目前面临着严重的财务危机，其业绩暴跌 70%， 债务高达 1.1 万亿元，资产问题愈发凸显，市场对其未来发展充满不确定性。以下是有关万科的详细分析，以及其中一些反直觉的信息。股价与债务危机。万科的股价在近期经历了显著下跌。1月17日，香港市场股价下跌 3.1%， 深圳市场股价下跌 3.6%。这一情况反映出市场对万科流动性 和销售疲软的担忧。债务问题尤为突出。2025年，该公司需偿还超过300亿元的债务，尽管万科曾向部分债权人表示已准备好偿还到期的本息。2. 高管去向的疑云。万科的主席兼首席执行官朱九生 Zhu Jiusheng 的去向成为市场关注的焦点。有报道称他可能被警方拘留，这一消息引发了市场的恐慌情绪。尽管朱九生在社交媒体上发布消息，宣传万科的租赁业务，并提到将在假期后重新工作，但这一信息的发布并没有消除公众的疑虑，反而加剧了不安。3. 政府接管的潜在影响。对于万科的未来，市场分析师的意见分歧。一些分析师认为，政府接管可能被视为正面消息，有助于稳定市场并解决短期债务问题。反之觉得是，尽管接管通常被视为企业失败的标志，但在当前情况下，政府的介入可能被视为保护措施，有助于避免更大范围的市场崩溃。4. 信用评级的下调。万科的长期信用评级被穆迪 Moody's 从 B1 降至 B3， 进一步加深了投资者的信心危机。尽管万科曾被视为太大而不能倒的企业，如今在债务危机的背景下，这一观点似乎不再成立。5. 销售疲软与市场支持的矛盾。尽管政府去年为房地产市场提供了支持，但万科的房屋销售依然疲软。这一现象反映出市场的整体信心仍未恢复。反之觉得是，尽管有政策支持，万科及其他开发商仍面临巨大的销售压力，显示出政策的有效性受到质疑。6. 债务再融资的挑战。分析师预计，万科可能会通过与债权人的谈判来进行大部分债务的再融资。然而，成功的可能性和具体的执行方式存在不确定性。这种不确定性使得即便是看似合理的债务管理策略也充满风险。7. 资产负债表的健康状况。万科的资产负债表显示出其资产可能存在破产的风险。尽管该公司在过去被视为相对稳健的开发商，但如今的财务数据却揭示了其潜在的破产风险。这一转变凸显了市场对大型开发商的信心正在快速下降。反之觉得是，曾经的行业领头羊如今竟面临如此严峻的挑战。8. 市场对政府救助的期待。尽管万科的情况严峻，但市场对政府救助的期待依然存在。一些分析师认为，政府的介入可能会给市场带来一线希望。然而，政府救助的具体实施细节仍不明确，且市场对这类措施的反应也可能是复杂的，可能导致短期内的市场波动。9. 未来的不确定性。随着房地产市场的持续低迷，万科的未来依然充满变数。尽管有政府介入的可能性，但市场对这一措施的具体效果仍持谨慎态度。反之觉得是，在一个普遍看好的背景下，万科这样的巨头却面临着生存危机。结论：万科企业当前的境遇揭示了中国房地产行业面临的深层次问题。虽然市场对政府救助抱有期待，但具体的实施细节和效果仍然不明朗，反而使得市场更为焦虑。万科的案例警示我们，在看似充满机会的市场中，潜在的风险和不确定性依然存在。
Important content overlooked in the Vanke report. 1. Debt-to-asset ratio and insolvency risks. One critical aspect that many observers may overlook in the discussions of Vanke's crises is the implications of its reported debt of 1.1 trillion yuan against its assets, which are described as being insolvent. The specifics of the debt-to-asset ratio are vital for understanding the company's solvency and liquidity risks. A high debt ratio suggests that the company is heavily leveraged, meaning it has a higher obligation to meet debt repayments relative to its income and asset base. Significance: high leverage can lead to severe financial distress, especially in a downturn, which is exactly what Vanke is experiencing. Analysts might focus on immediate issues like stock price drops and executive turmoil, but the underlying insolvency poses a long-term threat to the company's viability, potentially leading to bankruptcy or forced asset sales. 2. Market reactions and speculation dynamics. The report highlights that Vanke's stock prices have been volatile, particularly in response to rumors regarding the CEO's situation and government intervention. What is essential to note here is how market speculation can exacerbate a company's problems. The immediate reaction of investors to news, whether verified or not, can lead to panic selling, which compounds the company's financial difficulties. Significance: this indicates a fragile investor sentiment and the potential for a feedback loop where negative news leads to stock price declines, which in turn increases the company's financial strain. Understanding this dynamic is crucial for stakeholders who might be considering their options in light of the market's reactions. 3. Government intervention speculation. There is significant speculation regarding whether local government intervention, including a potential takeover, would be beneficial for Vanke or merely a temporary fix. Some analysts suggest that such intervention might stabilize the company, while others point out that it could set a precedent for government involvement in private enterprises. Significance: the implications of government intervention extend beyond Vanke. They reflect broader trends in the Chinese economy regarding state control and intervention in the private sector, especially during times of economic distress. This could signal a shift in how the government handles failing private companies, potentially affecting investor confidence in the entire real estate market. 4. Zhu Jiusheng's role and leadership challenges. The uncertainty surrounding Zhu Jiusheng's whereabouts and his potential detention raises questions about leadership continuity during a crisis. Leadership in times of turmoil is critical. Effective communication and strategic decision-making can help stabilize a company. Significance: the fate of Vanke may hinge not just on financial metrics, but on the leadership's ability to navigate through the crisis. Zhu's leadership style and decisions in the upcoming months will be pivotal, and the lack of clarity regarding his situation adds an additional layer of risk that investors and analysts should closely monitor. 5. Long-term market trends versus short-term crisis. While the report focuses on Vanke's immediate crises, like falling stock prices and potential governmental intervention, it is also essential to contextualize these events within the long-term trends in the Chinese real estate market, which has been under pressure for years. Vanke's situation is not isolated; it is reflective of broader market dynamics, including decreasing home sales, rising debt levels across the sector, and tightening regulations. Significance: a focus solely on Vanke's situation without considering these long-term trends may lead to a misinterpretation of the company's prospects. Stakeholders must appreciate that Vanke's challenges are symptomatic of systemic issues within the Chinese real estate market that could lead to widespread implications for many developers. 6. Credit rating downgrade implications. The downgrade of Vanke's credit rating by Moody's from B1 to B3 is a critical indicator of financial health that many might overlook amidst the noise of executive scandals and stock price drops. This downgrade suggests a significant deterioration in creditworthiness, which could hinder Vanke's ability to secure financing. Significance: credit ratings affect borrowing costs and investor confidence. A downgrade can lead to higher interest rates on future debts, further straining Vanke's finances. Understanding the ramifications of credit ratings in the context of a company's financial strategy is essential for grasping the full scope of Vanke's challenges. 7. Investor sentiment and future outlook. Investor sentiment is a significant driving force behind stock prices and can be easily influenced by news cycles, rumors, and executive actions. The report indicates that analysts are divided on the potential outcomes for Vanke, which reflects broader uncertainty in the market. Significance: this uncertainty can lead to volatility and irrational market behavior, which could deter long-term investment. Stakeholders must consider how sentiment can shift rapidly based on new information, highlighting the need for clear communication and strategic planning from Vanke's management. Conclusion: The situation at Vanke is fraught with complexities that extend beyond immediate financial metrics and stock price fluctuations. The overlooked aspects, debt levels, and insolvency risks. Market dynamics influenced by speculation, leadership uncertainty, and long-term trends in the real estate market are crucial for understanding the broader implications of Vanke's crisis. Stakeholders must remain vigilant and consider these factors when analyzing Vanke's prospects in the volatile landscape of China's real estate market. 1. Severe financial distress and market reactions. China Vanke is currently grappling with a staggering debt of 1.1 trillion yuan, approximately $160 billion, while experiencing a 70% drop in performance. This financial distress has led to significant declines in its stock prices across both Hong Kong and Shenzhen markets, with reports indicating a 3.1% drop in Hong Kong and a 3.6% drop in Shenzhen. The company's long-term credit rating has also been downgraded by Moody's from B1 to B3, reflecting a deteriorating liquidity position and sluggish sales. The severity of Vanke's financial situation raises questions about the sustainability of its business model and its ability to navigate through the current real estate market downturn. 2. Leadership uncertainty and speculation. The situation has been exacerbated by uncertainty surrounding the company's president and CEO Zhu Jiusheng. Reports of his potential detention by authorities have caused panic among investors and contributed to the stock's decline. Zhu's communication post about returning to work and promoting Vanke's rental services seems to contradict earlier reports, creating confusion and speculation about his actual status. This leadership uncertainty is damaging to investor confidence and complicates the company's response to its financial crises. The interplay between corporate governance and regulatory scrutiny in China is critical in understanding how Vanke's leadership issues may influence its recovery prospects. 3. Government intervention possibilities. The notion of a government takeover or intervention has emerged as a potential lifeline for Vanke. Analysts suggest that a government-led restructuring could stabilize the company temporarily and alleviate some of its immediate debt pressures. However, there is ambiguity about how such a takeover would unfold and whether it would be viewed positively by the market. The historical context of Chinese government interventions in private enterprises presents both opportunities and risks, which could influence the future trajectory of Vanke and other distressed developers in the country. 4. Broader implications for the Chinese real estate market. Vanke's plight is emblematic of a pervasive crisis in the Chinese real estate sector, which has been plagued by declining housing prices and a wave of corporate defaults. As one of the largest developers in China, Vanke's failure could signal systemic risks in the market, prompting further scrutiny by investors and policymakers. The interdependencies within the real estate market, financial institutions, and the broader economy mean that Vanke's difficulties could have far-reaching consequences. Observers are closely monitoring how the situation unfolds and what it might indicate about the future stability of the Chinese real estate market and the effectiveness of government interventions in revitalizing the sector. In summary, Vanke's current predicament highlights critical themes of financial distress, leadership uncertainty, potential government intervention, and broader market implications, which are pivotal for in-depth analysis and discussion. 1. Lehman Brothers 2008. Lehman Brothers was a global financial services firm that filed for bankruptcy on September 15, 2008, marking the largest bankruptcy filing in U.S. history. The firm had accumulated over $600 billion in debt with significant exposure to subprime mortgages. The collapse triggered a global financial crisis, leading to severe market turmoil and a recession. Lehman's failure highlighted risks associated with excessive leverage and the interconnectedness of financial institutions. 2. Enron Corporation 2001. Enron was an American energy company that became infamous for its accounting fraud. At its peak, Enron stock was valued at around $90 per share, but the company filed for bankruptcy in December 2001 after revelations of widespread accounting malpractice and financial instability. Enron's debts were estimated to exceed $30 billion, and its bankruptcy led to significant losses for shareholders and employees, as well as changes in regulations regarding corporate governance and financial reporting. 3. General Motors 2009. General Motors GM, once the world's largest automaker, filed for Chapter 11 bankruptcy protection in June 2009 amid a severe financial crisis exacerbated by the global recession and declining auto sales. At the time of its bankruptcy, GM had over $172 billion in assets and $82 billion in debt. The U.S. government intervened with a bailout package to stabilize the company, leading to a restructuring process aimed at reducing debt and repositioning the automaker in the market. The case underscored the challenges faced by legacy industries in adapting to changing economic conditions. Future outlook for China. Vanke, predictions and scenarios. China Vanke, one of the largest real estate developers in China, is currently in a precarious situation marked by a staggering debt of 1.1 trillion yuan and a reported 70% drop in performance. The company's future appears uncertain, with several potential scenarios and predictions based on current trends and market dynamics. 1. Government intervention and restructuring. Given the scale of Vanke's debts and the implications for the broader economy, it is likely that the Chinese government will intervene in some capacity. Predictions suggest that government takeover or bailout. There is a strong possibility of a government-led restructuring or takeover. This could stabilize the company's operations and prevent further market panic. Analysts have indicated that such a move might be perceived positively, as it could provide the necessary liquidity to address immediate debt obligations. Support for creditors. The government may also facilitate negotiations between Vanke and its creditors to refinance debt due in 2025. This could alleviate short-term pressures and allow Vanke to continue operations while seeking long-term solutions. 2. Market reactions and investor sentiment. Vanke's current situation has led to a significant decline in its stock and bond prices, reflecting investor fears. However, future market reactions will depend on several factors. Restoration of confidence. If government intervention materializes and is perceived as effective, investor sentiment may shift positively, leading to a recovery in stock prices. The public's perception of Vanke's management and future prospects will play a crucial role. Continued volatility. Conversely, if uncertainties around the CEO's situation and the execution of any government plans linger, market volatility may continue. Investors might remain cautious, leading to further price declines. 3. Long-term outlook for the real estate sector. The challenges facing Vanke are emblematic of broader issues within the Chinese real estate market, which has been grappling with a downturn. Market recovery potential. As the government seeks to stabilize the housing market through policies and financial support, a gradual recovery could occur. This would benefit Vanke provided the company can adapt and capitalize on new opportunities in rental and affordable housing markets. Shift in business strategy. Vanke may pivot its business model towards more sustainable and diversified offerings such as rental properties, which are becoming increasingly important in the current economic climate. This strategic shift could enhance its resilience against future market fluctuations. 4. Impact of economic conditions. The overall economic environment in China will significantly influence Vanke's recovery trajectory. Economic stimulus. If the Chinese government implements effective economic stimulus measures to boost domestic demand, the real estate sector could rebound. Vanke as a major player would benefit from increased housing sales and improved cash flow. Continued economic challenges. Conversely, if economic conditions worsen, marked by lower consumer confidence, reduced purchasing power, and ongoing debt crises, Vanke might struggle to regain its footing, further complicating its debt repayment capabilities. 5. Technological and operational innovations. In navigating its current crisis, Vanke might leverage technology and innovation in real estate development. Digital transformation, investing in technology to enhance operational efficiency and customer engagement could provide Vanke with a competitive edge. This includes utilizing data analytics for market forecasting and customer relationship management. Sustainable development practices, emphasizing sustainability in construction and development, can attract a new segment of environmentally conscious consumers and investors aligning with global trends towards green living. Conclusion. The future of China Vanke hinges on a multitude of factors, including government intervention, market sentiment, and broader economic conditions. While there are pathways to recovery, such as potential government support and strategic pivots towards rental markets, significant risks remain. The company must navigate these challenges adeptly to emerge as a resilient player in an evolving real estate landscape. As the situation develops, stakeholders will need to stay vigilant, adapting to both opportunities and challenges in this dynamic environment.